Chandra, but one thing everybody will come back to you again and again saying, and I go back to the margin picture, eventually you'll have to deliver that for your shareholders and they'll say, how much more can you do? What's the visibility on the future on that? And how much more can you go?
At this point, we are confident that we can maintain the margin. That's our goal. Last quarter we said we'll maintain the margin at last quarter's level, but we have slightly improved it, and the offshoring will continue. When we say a global network delivery model and we will recruit in different parts of the world, it does not mean we are not going to increase in India. India is still going to be a largest base of our overall system.
And that's also the compulsion of the times right now, eventually.
It's a compulsion of the time, compulsion of the skill base that is available, and the whole model that we have built that has been successful, which has got a lot of traction with the clients. Holistically, if you look at it, while we will recruit in different parts of the world, India will still continue to be the largest pool of people where we will have.
One quick word, Chandra, before I wrap it up on the billing rates. You've not turned very bullish on that. You are saying that this may even go down. If that continues to be so, in terms of margin levers, I mean, the kind of things that Ajay and Lakshmi talked about, are we talking about that, come get more business back here? Because, as you said in the beginning, that cost cutting is as much as you can go, and you can't really do that.
See, the margin, you need to look at it in two or three different ways. Pricing, I said that this fiscal year, expecting a pricing hike is not realistic. That doesn't mean that the pricing will not go up. Market has to come back. Clients are in pain. You are part of a system which is in pain. So you need to be sensitive to that. So it is not possible to expect that the pricing will go up this year. Second thing is that always you'll be able to command higher price for high-end services. The more complex the job you do, the better pricing that you will command. And over a period of time, the business models will change. Our non-linear business models have been kicked in, whether it is platform-based BPO, right, whether it is our product solutions, but they will take another 24 months at least before we can start to see some meaningful numbers.
You're sticking to the targets of trying to take that into a $3 billion business space, and the kind of stiff targets that you like to set for yourself.
See, I mean, yeah, the 3 billion is, I think, is a good vision to have, and it's a good number to go after, considering that we have three important themes in which we have invested over the last few years. So we think that's a good target to shoot for, and the team is charged up, and there is a market, and we're going to go after that.
All right, you're already sounding like the way I'm sure you would be sounding October onward. There will be a transition, we know. Let me very quickly, just to wrap up this bit on Europe, the situation looks bleak, but in terms of the opportunities, if I may use the word, in the acquisition space, do you see businesses are actually going out of business, and they might turn to you and say that, look, absorb us, and there are value propositions in the European space?
Yes, there are businesses which are struggling, but like always, when it comes to acquisition, we maintain that we will be very careful and prudent about that. But we are exploiting those opportunities in terms of going after the clients and going after their clients. So there have been a few examples. Recently, we talked about a major win and delivery with Volkswagen in the infrastructure space, which we won over an incumbent, and so on and so forth. So we are carefully assessing the situation in terms of how we can take advantage of the fact that some of them are not doing so well. But when it comes to acquisition, we'll be very prudent about it.
And there are enough pieces in the puzzle which are lying there which you could fit into the TCS model? There are enough options like that?
There are enough options there, but the question is how good a fit they are for TCS is the question that.
All right, so we'll find that out, and I'm sure Chandra will be keeping a close eye on that. Ajay, just to wrap this up, a lot of people look at TCS as the benchmark for the industry. If there was a message to go out in terms of that this is going to be the industry of the future, should the IT majors or the kind of different kind of hirings that you've done in the past, are you being able to give them a sense of future growth as you go ahead, saying that yes, quarter to quarter for another 4 quarters or so, and probably after that we are looking at TCS once again putting forward the gear?
Absolutely true, because if you look at our total number of recruitments that we are doing from the campuses, that is going on year by year, that's increasing, and we have also said that from this year onwards we'll be going to the campuses in the 8th semester. So recruitment is there, and it's a temporary phenomena where things are the way the whole environment is. Right. But I think people should look towards IT as one of the areas where they should come in, and is definitely going to improve as we go forward.
All right, sounds great. Good luck, gentlemen, and Chandra, to you as well. We'll keep on catching up with you in a few quarters as well, and good luck to you both as well for doing that. We'll take a quick break. On the other side, when we come back, we have the man in the hot seat right now and the man of finance, Maha, joining us on the other side to tell us how precarious the quarter-to-quarter living is going to be like as we go ahead with TCS's numbers. Welcome back. You're watching our special coverage of the TCS numbers analysis. More than 48 hours, actually 72 hours since the numbers came out, and everything is out in the open. And what we can tell you is that the management is sounding cautious. They are not saying that the future looks very bright. They are going quarter by quarter. We have Chandra and team. Now is the man in the hot seat, at least for now. S. Ram on the right, Mahalingam on the financial bit, and Suryakant, the head of the US business, the crucial part, which makes Ram very bullish, at least for this quarter. Ram, thanks so much for joining us. A bit of a strange words from Ratan Tata at the AGM saying that, you got to do better, things are not looking so good, and here you come, thanks a little bit from Suryakant and a little bit from Maha to give a stellar performance. Obviously not a consistent way to look at the future quarters.
No, I think from an operational efficiency point of view, we have been on a journey in the last couple of quarters. That was what was demonstrated in terms of performance this quarter. When I looked at the offshore leverage, which was very substantial, that led to some amount of operational improvements in terms of margins. Second area we focused was on rationalizing some of our cost structures, whether it was beyond the employees, which again showed up in our performance. A little bit of growth, which from a volume perspective helped us with some wins and some possibilities for future. To me, the message which we communicated was operational efficiency and focus is going to be one of the central themes as we go forward.
As you treat through these troubled waters,
yes,
especially.
Yes. The second was very clearly is that there are some growth opportunities which we should try to capitalize on, whether it's in the BFS sector and or sectors like life sciences as well as energy. The third, what we said was be prepared for some yo-yo because the conditions on the ground are not as stable as one would like to see. We still see occasional pricing pressure, we still see some bankruptcies, and those are to be expected in this turbulent environment.
The second bit that you talked about hints towards larger diversification plans, areas where you were not present. How much of compensatory business do you see come off? Because otherwise some people would turn back and say this was a one-off quarter, obviously, in some ways. Can you do it as fast by the next quarter?
I think as we look at the future, these are the sectors which are going to be very, very important. The recovery will not be as fast as one would see because the spend itself is going to be gradual and not certain immediately just throw money into certain developments. To me, if you ask me what's the scenario couple of quarters ahead, there will be some opportunities which will be substantial. Today it will be more incremental because it's not going to be completely compensating for any degrowth in manufacturing sector, telecommunications or high tech. Those are the sectors which have been affected the most as we see.
All right, talk about the American